Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 17th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. Remember, at the bottom of those emails, you'll find which stocks are giving you overbought and oversold cluster signals. On Tuesday's email, I noticed there were 0 overbought cluster signals and 72 oversold ones, and I imagine tonight will be similar. In addition to that, we're heavy users of X, formerly known as Twitter. My handle is @BrandonVanZ, and we really appreciate those of you that click like and repost on that platform. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you can see, we've got the S&P 500 heat map pulled up here in front of us. And things are getting a little squirrely here all of a sudden. We've had quite the sell-off here in just the last couple of weeks. Really everything that has felt uncomfortable has started just here in the month of August. I remember when I was with you the first day or two of August, I had mentioned that August was actually the worst month of the year for the Dow. Now, when I said that, I didn't really think much of it. I thought, well, maybe we get a little bit of a stalling out of the market, but all of a sudden, we're getting some more serious selling that's taking place. Now, this is not any sort of violent move that we would associate with, let's say, last fall or even, March of 2020 or 2008 or 2011. We're not at that kind of level yet, but it has just been persistently weakening day after day after day, it feels. Even here tonight, some of you saw me posting over on Twitter about some of the things happening after hours, including some of the interest rate environment and the Bitcoin. In fact, let's go ahead and quickly take a look at that chart. Remember, with us not able to get to the 100 likes once again, we won't be able to spend a lot of time on this because I want to make sure we wrap up this video in just 15 minutes. So we're not going to do a deep dive into these 12 grids, but I just wanted to point something out to you that things are getting a little chaotic here all of a sudden. Take a look at Bitcoin. It's the chart off to the right-hand side here. Take a look at that candle right there. I mean, it just collapsed here this afternoon. We're down at 26,000 approximately on Bitcoin. Remember, it wasn't so long ago we were talking about how it was holding 30,000. So just like that, rug pull on one of the more speculative assets that are out there, a good way to judge risk appetite, and it's not good right now. The other thing that I was posting about here a moment ago was the 10-year U.S. Treasury yield. Remember, on Thinkorswim, you can pull that up using TNX. And if you look at this chart, it continues to look like that strong trend trade. I remember when I was making the same comments here a few weeks or months ago as well, is that if you just replaced the word TNX with whatever your favorite growth stock is, you would be licking your chops at that trend right there. It is absolutely gorgeous. Well, what I mentioned on Twitter, or X, was we are basically at multi-year highs on the 10-year Treasury yield. On an intraday basis, you'll notice that we fell a little bit shy of where the high was on October 21st. But on a closing price basis, this is actually not just the 1-year high for TNX. This is the 10-year Treasury yield. It closed at 4.30%. It's not just a 1-year high like we're looking at here on this particular chart. But if you were to go back on a 20-year chart, you would have to go all the way back here to this time period in 2007, since the last time you had a close at the level that we're at right now, on a daily candle. So we're talking about multiple years, over a decade, 15 years since we've seen interest rates at these levels. And that is absolutely wrecking some areas of the market right now. You'll notice that bonds are just falling off the map. There's the long-term Treasury bond market, there's the foreign bond market, there's the junk yield bond market. Those things are just getting hammered right now. You'll notice that preferred shares are getting hammered. You'll notice that foreign stocks are just getting hammered as well. EEM has had two oversold cluster signals in a row, as has foreign bonds, as has TLT, the long-term U.S. Treasury bonds. Remember, the foreign securities are going to hurt a little bit when we have a strong U.S. dollar, which we've been seeing here lately. Gold got annihilated here lately as well. You're sitting here looking at 3 straight days of oversold cluster signals there on gold. So things have gotten very chaotic in a hurry. Now back on over here to the heat map, I'll show you that one area that has been kind of, really struggling here more recently has been the utilities. Those suckers just cannot get out of their own way right now, and it's not all that much better with the REITs. In fact, here on X or Twitter just a moment ago, where did I post that? Hang on just a second. I wasn't prepared for this conversation, but I'll show you here real quickly because it's quite relevant. Utility stocks on a year-to-date basis are down double-digit percentages right now. Remember, it wasn't so long ago we were talking about the S&P 500 near 52-week highs, yet the utility space is just getting crushed within the market, and that all goes back to the chart that I just showed you there a moment ago with TNX. Basically 15-year highs or whatever it is there on rates. It's not doing any favors to those interest rate sensitive areas. So back on over here to the heat map, no surprise that most utilities were down yet again today. Most REITs were down yet again today. Most consumer staples were down today. There really wasn't much in the way of green that was out there. You had the energy area that was consistently green, so we did have some jubilant moves there within the oil patch. But otherwise, it was kind of hit and miss, sputtering all over the place. Cisco came out with their earnings last night. This is the tech Cisco, not the consumer staples Cisco. And it was up 3% today. So, some of the dividend growth investors might be happy about that, as that's been a pretty consistent performer over time. We finally saw Pfizer make a move higher. We've been waiting for that for a while, but it was up about 3% today. Johnson & Johnson was up 1%. Spent a little bit of time in my question and answer session here earlier today talking about Johnson & Johnson. Of course, their exchange information is probably due tomorrow for many of you regarding the Kenvue news. I'll be sure to post a link to the Q&A session where I spent 3.5 hours working with our students here earlier today in the write-up, in case you are a premium member and you want more than 15 minutes worth of content from me here today. So we had a little bit of moves there higher there in some of those pharmaceuticals areas. On the flip side, you'll notice that the worst performing stock today was CVS Health. Some of you may have seen the news already, but apparently Blue Cross Blue Shield out in California decided to move their business from the pharmaceutical benefits managers, or the PBMs, from CVS to Amazon, and also a company that is partially owned by Mark Cuban. So, that was a huge disruption in that particular line of business. CVS down 8% today, and that really carried through to a lot of these other health insurance and PBMs that were out there. Cigna was down 6% today. McKesson was down 3%. Cardinal Health, which had just hit a 52-week high last week, actually was an all-time high, was down 4% today. So, you can all send your disgruntled letters to CVS apparently today as a result of that news. You can also see that we had some struggles there within a lot of the consumer discretionary area, and technology really didn't benefit much either. In terms of the Magnificent Seven, you'll see that Alphabet was up today, but that was pretty much it. I think all the other 6 of the Magnificent Seven were down here today, and this is a continued theme. You'll notice that Tesla is probably the worst of them, down about 3%. Some of you might have seen my post here a moment ago on Twitter where I show you the 1-month heat map. So what I just showed you a second ago was the 1-day heat map. But this is interesting as well. If you were to go back over 1 month and look at the Magnificent Seven, you can see things have gotten ugly in a hurry. Remember, these were the leading stocks of the market for most of 2023, yet on a 1-month look-back basis right now, which includes the second half of July, by the way, which was actually strong. So most of this is a direct result of what's happened here in just the last 2 or 3 weeks. But Alphabet is the only one of those Magnificent Seven that actually has a positive return. It's up 6%. All of the 6 others are down, with the worst being Tesla, down nearly a quarter. I hadn't even really been paying all that much attention to that. That caught me by surprise. But 1/4 of Tesla's value has disappeared in just the last month. And we're talking about hundreds of billions of dollars here, right? So this is no small thing. On the 1-month look back here, you'll see again you have that theme of oil stocks holding up there pretty nicely. But otherwise, it's pretty sporadic out there. You will see that we had a pretty nice move there with some of those healthcare companies. So Johnson & Johnson is up about 10% over the last month. Eli Lilly, of course, with its weight loss drug, up 18% over that time period. Merck's up 3%. AbbVie's up about 9%. And then we talked about earlier in the week about the strength in Amgen here lately, up about 13%. So, that's an area of a little bit of promise there, but really it's ugly out there, and it's mostly gotten ugly in a hurry. In terms of the specific numbers, let's take a look at the breadth measures here. You can see that just 131 stocks out of the the S&P 500 closed higher here today. So that was not a very good hit rate. That's only about 26% of stocks closing in the green. Let's go ahead and take a look at our normal 4-grid now and see what our postures look like here tonight. No surprise, they haven't changed since the last time I was with you there on Tuesday. They have remained bearish, right? We've been bearish on the posture on the S&P 500 here since August 4th. And it's done nothing but weaken since then, to the point where we're now in the strongly bearish, not just bearish in general, but strongly bearish territory with these darker shades of pink on the S&P 500, the NASDAQ Composite, and the Russell 2000. The Dow Jones is also bearish, but is still in that weakly bearish posture. Remember, this green line would have to fall below 50 before it would go to strongly bearish. But, again, similar to what I mentioned to you on Tuesday, it's a clean sweep of bearishness right now. And the other thing that's not really helping all that much is that we are losing support levels. In some of the indices cases, we're losing 50-day support levels. You can see by this chart in front of you here that the 30-day moving averages have been lost on all 4 of these charts as well. So we're in a little bit of a free fall type of a moment right now. Remember, tomorrow is options expiration for the month of August as well. So make sure you're babysitting your positions. Some of the things that you felt like you were probably in the clear on might very well come back to scare you tomorrow. So tomorrow could be at another volatile day. But you'll notice here that the S&P 500 was down 0.77% today. The Dow Jones was down 0.84% today. The NASDAQ Composite was down 1.17% today, so it was our worst performer. And then the Russell 2000 was down 1.15% today. You will see here that the NASDAQ has had its second day in a row of oversold cluster signals. So perhaps that will give the markets an excuse to, have a little bit of a reversion to the mean. But a lot of times what I've noticed in the past is that whatever trend we're in going into expiration day, it kind of crystallizes on that day. And then it's the following week where you get some sort of a opposite type of a push. Whether that happens this time or not, anybody's guess, but something to keep in the back of your mind there. You will notice that the S&P 500 and the NASDAQ Composite both have red 30-day moving averages, so prices below falling moving averages now. But on the Dow and the Russell 2000, they're still yellow because the moving averages are still moving up just a touch. In terms of our 3 green arrows chart, you can see here, no surprise, it is 3 red arrow signals on all 4 of these charts right now. And then on our 1040 crossover method, where we're looking back over 3 years on these charts, and each one of these candles represents 1 week in time, you will notice that from a longer term perspective, we still have bullish crossovers, but we're starting to run into some turbulence there as well. Notice the little red arrows above all 4 of these charts telling us that price is now trading below the 10-week moving average right now. So while the moving averages themselves haven't crossed, we're starting to see the price cross below the moving averages, and that's the first step before finding that the moving averages might cross down the road. So that's what I had for you here tonight. Again, if you want to get me back on track with those 1 hour long videos, which would be helpful in explaining some of these movements that we've been seeing here recently, I ask one simple request out of you. Click like for me there on X, formerly known as Twitter. If we're up and over 100 likes by the time I'm scheduled to do the video on Tuesday, be happy to give you a full-length hour-long presentation. On the other hand, if you prefer these shortened 15-minute versions, then don't click like. And if we're under 100 likes, then we'll keep it short and sweet, just like we did here today. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.